Before we zoom into the actual return itself, though, I think it's worth spending just a minute on the bigger safeguarding picture and the changes that are happening at the minute. Because this new safeguarding report isn't happening solely in a vacuum. There are other broader changes happening. So there's a new safeguarding regime that goes live on the 7th of May, and it's basically the biggest overhaul of safeguarding rules since the payment services regulations and e-money regulations first came into force. And these changes are being driven by some fairly high-profile firm failures that we've seen in the past. So the likes of Ipigo in 2019, which exposed issues like poor record keeping, years of delays for customers trying to get their funds back, and customers recovering less than half of their funds. So the FCA is actively trying to close these gaps, and the direction is definitely tighter controls, more evidence needed, and more frequent reporting. So at a high level, the FCA is trying to tighten safeguarding across 5 key areas. I'm just going to highlight these now. So first is daily reconciliations. So the FCA are expecting reconciliations at least once on each reconciliation day rather than each business day. So that will be helpful for larger firms with sort of complex business models and different business days across different geographies. You'll define the reconciliation days. And what you need to do on those reconciliation days is compare your safeguarding requirement versus your safeguarding resource. So that's the amount that you should be holding versus the amount actually sitting in your accounts. And we'll discuss how you properly calculate that in just a minute. Second up is resolution packs. So the FCA are sticking to their requirement that resolution packs are essential. They must be a living, breathing document showing all your safeguarding accounts, your custodians, your list of any agents and distributors if you have them, and step-by-step procedures for returning funds to customers, along with copies of your safeguarding contracts. The third thing on the list is annual safeguarding audits. So these must be completed by most firms now, unless you're a firm that is safeguarding less than £100,000 over the past 53 weeks. The auditor must be qualified and have safeguarding experience. The fourth thing on the list is the FCA is expecting stronger third-party oversight by firms. So they're expecting firms to better manage who holds their safeguarded funds, so the likes of banks and insurers or guarantors. And they're also expecting you to have documented decisions and plans in place for when things happen like insurances or guarantees lapse. They're expecting you to have built-in decisions ready to go and be able to act quickly. And the last thing on the list, which is what we're all here today to discuss, is the new monthly safeguarding return. So all firms must submit a new monthly safeguarding return to the FCA, and we're going to zoom in on exactly what this return is asking us for now. So the real objective with this return is to ensure that the FCA receives regular and comprehensive information about a firm's safeguarding of relevant funds. And at a high level, this return covers your safeguarding method, balances, the institutions where you're holding your safeguarding funds, your safeguarding resource versus requirements, reconciliations, record keeping, and any notifiable breaches. And the big question that firms always ask, does this report apply to me? Well, yes, it applies to all safeguarding institutions. That includes authorized payment institutions, electronic money institutions, and small payment institutions and small EMIs where they have opted into safeguarding. And the what you need to report bit, this is any relevant funds that you're required to safeguard under the payment service regulations or the e-money regulations. In terms of submission, the return needs to be submitted within 15 days after month end to the FCA via their RegData platform. The first month is May 2026, so 15 business days after month end would be 19th of June, so mark that date in your diaries. Now, there's one sort of key consideration with this return, and that is namely that the various sections are conditional. So, for example, sections 1, 2, and 9 will apply to all firms. Sections 3 and 8 apply to you only if you were required to safeguard during the period, and sections 10 to 17 only apply for unrelated payment services. So, for example, if you're an EMI providing payment services unrelated to your e-money issuance, or you're a small EMI who opted in, or a credit union who opted in, that's when you need to complete those sections. And now just on to the various data points that you'll need to collect. So if you were required to safeguard during the period, which I assume most of you will be on this call, then sections 1 to 9 apply. And I'm going to run through very quickly what these sections require now. So section 9 is your basic setup. So your firm name, the type of safeguarding institution that you are, and details on your last safeguarding audit. Section 2 is all around your safeguarding method. So if you were in scope for safeguarding, what method did you use? Were you using segregation, insurance or guarantee, or maybe some combination? The number of clients that you safeguarded for during that period, and any use of non-standard internal reconciliation procedures during that period. The third section is fairly simple. That's your balances. So that's simply your highest and lowest safeguarding requirement during the period. Fourth is all about where you're holding those funds. So if you're using the segregation method, who is the credit institution where funds are held with, the type of account, the number of accounts, and the total amounts held in those accounts, and also the country of that credit institution. And the FCA is also keen to know, is the contract a fixed term contract, or is there a notice period component to the contract? For insurers or guarantors, you need to record the name of the insurer or guarantor, the amount covered, the date of expiry, and any total overdue premiums. And lastly, under that section, where you've invested in secure liquid assets, you need to record the asset type, the name of the custodian, and the total value of assets held at the end of the reporting period. So fifth section is your resource versus your safeguarding requirement. So that's where you report what you've actually safeguarded across all of your various bank accounts, your segregated funds not yet placed, and any relevant assets and insurance or guarantees that you have in place. You then compare that to what you should be safeguarding, and that includes any amounts received but you've not yet allocated to an individual client account. And then you work out the difference between the two. So you work out whether you've had an excess or a shortfall at month end, and then you need to disclose what you've done to fix that excess or shortfall. Section 6 is the D+1, day plus one segregation check. So that's where you report your safeguarding requirement versus safeguarding resource from your last internal reconciliation that you did, along with any adjustments that you made. Section 7 on reconciliations is about whether you carried out internal reconciliations using your own books and records on every reconciliation day, and did you also carry out external reconciliations using external evidence like bank statements, for example, on every reconciliation day. So you just need to let them know that you did that. Section 8 is all around record keeping. So think of this as your inventory of all of your safeguarding accounts and assets. So they will want to know how many accounts you had at the start of the month, how many you opened during the month, how many you closed, and how many you had at the end of the month. Then you confirm how many of those accounts are covered by an acknowledgement letter, and if any letters are missing, then explain why. The last section is around notifiable breaches. So this is where the FCA is basically asking you, did anything happen during the month that you should have notified us about under CAS? So for example, were there material errors in your records? So were your records materially out of date, inaccurate, or invalid? Were any reconciliations failed? So were you unable to perform the required internal or external reconciliation for some reason? Were there any unresolved discrepancies? So you performed the reconciliation, but you weren't able to fix shortfalls or excesses? And material shortfalls. So is there a material difference between your safeguarding requirement or resource? Then you should let them know. The last two notifiable breaches are around insurance policies and guarantees. So if they're about to expire and you don't have a replacement lined up, you need to tell the FCA 3 months in advance. And lastly, was there any other breach of duty under CAS 15 that the FCA should know about? Then you need to record it here. And so for any firms providing unrelated payment services, which we discussed just a minute ago, so for example, you're an e-money firm providing a payment service unrelated to the issuance of e-money, then you will complete the same checks that we've just described for sections 10 to 17. So in terms of next steps and how you get ready for this return, First up, you need to determine scope. Are you required to safeguard? Did you opt in, for instance? And do you need to complete sections 10 to 17 based on your business model? Figure out those points up front. Second is figure out, can you automate this return or streamline it in some way? You'll be doing it every month, so a canned extract is going to be really essential. And lastly, diarise the submission dates. They're due 15 business days at the end of each month, so get them in your calendars now.